Let me say this. No one's ever cried because they had too much in their tax account and then they were able to do something else. There's only tears if your tax account is too short and you're frustrated, right? If it's overfunded by, $5, $10, $15,000, pat yourself on the back and either roll it into the next year or move it to your profit account and celebrate that.
Hey, it's the Profit Answer Man, Rocky Lalvani. If you're new to the podcast, check out my interview with Mike Michalowicz. It's episode number 2. If you want to hear about each chapter in the Profit First book, go back and listen to episodes 3 through 13. Episode 1 is the why and how. On the Profit Answer Man, we learn money mastery without all the complicated accounting mumbo-jumbo using a simple system. Your accountant is busy documenting your transactions and creating a rearview mirror of what happened. My guess is you don't even look at the reports they sent you. If you're like most business owners, you struggle with this, and it's not your fault. We aren't taught money in school, and accountants aren't taught how to be profitable. The Profit First system created by Mike Michalowicz works, and he certified me to help you implement the system in your business. Remember, the new equation is sales minus profit equals expenses. Let's face it, without cash flow, you can't pay your employees, buy needed materials, or pay your mortgage and support your family. I help you to do that and more, so you can focus on the parts of the business you love and receive the rewards for your labor and investment into your business. The stronger you are as a business owner, the more jobs you create, the better we are as a country. Small business owners are the backbone of America, and for that, you deserve to be well rewarded. Just remember, more revenue does not equal more profit. That's why we focus on the bottom line. Today, we have another Profit First professional on the podcast. Why do I bring on my supposed competition? Because in reality, they aren't. There's enough of you for us to share and grow together. Plus, you need to find the person that you connect with that will help you to be more profitable. And at the end of the day, that's my goal. I don't care if you work with us, someone else, or you do it yourself. Go be more profitable because it makes for a better country and a better community. Sarah founded Webb CFO to provide accounting assistance and long-term financial planning guidance to licensed physicians in their private practices and small businesses. Through Sarah and her team are happy to address the fundamental aspects of day-to-day accounting, such as cash flow management and budgeting, take client financials to a step further by adapting a strategic approach, leveraging numerical data for forecasting and planning, and offering a broader management-oriented perspective. Sounds like just like what we do. Let's meet Sarah and learn from her. Welcome to the Profit Answer Man, Sarah Webb. It's great to have you join us today.
Great. Thanks for having me.
Can you share a little bit about yourself and your business?
Yeah, my name is Sarah Webb. I'm based in Fort Worth, Texas, but I run a remote fractional CFO practice. We primarily help licensed professionals such as attorneys and private medical practices with their day-to-day accounting, as well as forecasting, budgeting, and really just managing their whole practice from a financial aspect.
Very cool. So we do very similar work. We're both Profit First certified and trying to help business owners actually understand the business of business. What struggles do you tend to see with the business owners you work with?
Yeah, I think there's always a constant struggle of how much to pay yourself and how much to set aside for taxes. It always seems like one bucket is overloaded, right? You're either paying yourself too much and maybe so then you don't have enough to pay your taxes or your estimated tax payments, or likewise you're overloading the tax bucket and you're just like barely scrimping by, and so you're frustrated all the time. And so a lot of times we're helping clients. I say, we help you sleep at night, and it's with Profit First, it can be a pretty simple formula based on what's customized for your business on what you need to have in each bucket. We're kind of that financial whisperer of like the mentality of having enough, but also doing it in the right way so that you've got things when tax time comes and you have enough to live off of.
And it's funny because in the book, across the board, Mike says 15% for everyone. What I have found is for professionals or for people who have a higher percent income for them, especially if they are not on payroll and taxes aren't being deducted, that the 15% can be substantially too low from a tax standpoint. And so you sometimes have to make sure that you're a little bit higher.
Yeah, we do a little bit higher. I generally am targeting 20% if they have multiple businesses, right? So a typical structure for a lot of professionals is for them to own their own building, then they have their own practice, and then maybe they have another legal entity where they're a consultant or speaker on, their level of expertise. And so typically those are not all S corps, so they're not all running payroll. And so we look at a balance between payroll and estimated taxes to make sure we're looking at it as a whole versus kind of the individual businesses.
And the thing with Profit First is that tax account can get pretty big, and you think, oh, but you realize when the tax bill comes, depending on how they're set up, that tax account can get hit pretty hard. And it's just mentally more satisfying not to have to stroke a check that isn't in the tax account. You don't mind so much when it comes out of the tax account, although I hate paying taxes. I also understand it means I made a lot of money, and you got to find.
Let me say this: no one's ever cried because they had too much in their tax account and then they were able to do something else. There's only tears if your tax account is too short and you're frustrated, right? You had a big plan for something, or you've got to grip up some money for tax time. So if it's overfunded by $5, $10, $15,000, pat yourself on the back and either roll it into the next year or move it to your profit account and celebrate that. We're not saying that you can't live and celebrate. We're just wanting to make sure that you have enough so that you're not, fretting about it.
And I think that's one of the things I've noticed with people is if you have excess in your accounts, that's okay. Like they almost feel like there's a problem if they have excess cash. No, and just because you have cash in your account doesn't mean you need to spend it, right? It doesn't mean you need to overpay on taxes, or even if your operating expense account is overloaded, it doesn't mean you need to go buy something, right? It's okay to have cash and to let it be. Or what I've done now, because some of my businesses have built up some significant cash, we're sweeping it out and moving it to another institution. Right now, you can get almost 5%. So if you're sitting on significant cash reserves, you can make 5%. And if you need the money, it can be back inside of 24 to 72 hours. So you usually plan, but at least, they're picking up thousands upon thousands of dollars of excess interest just from doing a little financial management.
Yeah, we have some clients in similar situations, and we work with a few banks, and they do daily sweeps. So it's swept every night and then it's deposited back because, they're sitting on a few $100,000 based on the timing of their collections and their release of funds. And so, yes, I don't want to say it paid for all of Webb CFO last year, but I definitely could say, hey, just this one change, we covered half of, our bill, and you saw the value in everything else. So yes, it can be substantial.
Actually, I have a client that it covered all of my bill and then a whole bunch.
Yeah.
And that was just the thing is, that was just one little thing we did. And then they got so much value from everything else that we do. And it's these little things that you just don't notice that we're always paying attention to. So one of the things that I do for my clients, we create financial scorecards so that it makes it very easy to see how they're doing, thumbs up, thumbs down, where are we versus plan, and where are we trending. So it's really dynamic. I know you also do scorecards. Can you share a little bit about that?
Yeah. So we customize, and there's all kinds of KPIs for businesses and industry specific, but we really try to have 5 to 6 key metrics that we are that we're monitoring on a weekly, monthly, or quarterly basis, depending on what it is. And we really try to break those down into leading indicators and lagging indicators. So for medical practices, some of the and attorneys' offices, some of the leading indicators are: how many inquiries did you have? How many new clients did you take on? How many times is the phone being, someone's on the other line requesting your services? And we're keeping track of that with their staff to say, okay, in January for attorneys and for physicians, that's a high volume month on the phone because it's a new insurance plan. And a lot of people wait until after the holidays to make some legal moves. And so January is big. Well, year over year, how did we perform against last January? Were there more phone calls? Were there more inquiries? Were there more appointments? We're looking at that. On the lagging side, we're looking at gross collections and AR. So, are you collecting at a faster rate than you were? Are you writing more things off? For a physician, are there certain medical plans or insurance providers that are denying more claims? And do we need to go back and say, okay, instead of this one little box, now in this year, it's a different box. And so we're looking at things, really those on a monthly basis, because insurance companies, it takes time to process a lot of things. And so we'll go back and say, okay, this one provider is denying 90% of our claims. What's happening here? Is it the way that we're filling out the forms? Are they just being a testy insurance provider, which can happen? And what can we do to improve our process? And so we're looking at those on a monthly basis, and a scorecard. And I'm a big person. I love colors. So it's the stoplight. It's green, yellow, or red. We want as much green as possible.
We do very much the same thing. Green and red are big, and depending on the client, we customize it. So some of them will go and they'll shade, like from dark green to yellow to dark red. And you know what happens? It becomes so easy for them to just look at it and go, oh, thumbs up, thumbs down, or you start to see trends. So for some of our clients, we're actually looking at productivity of people. So, I
Mhm.
mean, even in a law firm, you could look at billing versus expectations, or how many patients did you see. And again, these are all the same principles. You just have to change what you're measuring to the business you are in, right? And doing that. And when you start to see certain people light up red, you immediately know you've got a performance issue. And if you see people light up green, hey, that's somebody that we need to thank. Maybe we need to give a bonus. Maybe we need to recognize. Maybe we need to learn from them. Go, how come this person's always green and, these people are always yellow, and being able to do a better job of that.
Yeah, a common question I get in professional services is, can I hire another attorney? Can I hire another provider? And so a lot of times at the beginning, we'll say, okay, this is how you pay for this person. It needs to see this many clients or patients per day. What's their volume? It needs to have this many hours until they've paid for themselves. And there's definitely a learning curve when you're bringing someone on 3 to 6 months, depending on your specialty and what you're doing. And right, there are years of experience. But yes, we are tracking labor efficiency. Are they paying for themselves, or how much they're contributing to the bottom line? So that we're also having a discussion of, oh my gosh, this person's green, 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 but they're getting burnout, and we can actually now afford another person. And let's start that conversation. As professionals at this level, they're not just you're not putting in a LinkedIn ad or on ZipRecruiter to find this next professional. It takes time. And so we're very conscious of that.
And so for me, when I look at that, you can't always do this. Some businesses, we can have subcontractors or somebody else to help. And actually, even in medical, you could probably bring in a subcontractor, or even legal, you could probably sub work out. I rather they get a little bit too busy and then bring the person on, versus, hey, we're starting to get busy, let's bring a person on, and then that person isn't able to they're red all the time. Then you're mad at the person, but they're like, hey, you're not giving me work because you don't have enough work. And so there's that balance there of when it's kind of like a step. People think it's a curve. It's not. It's, that person joins, your labor cost skyrockets up. And if your sales aren't at least on the way to helping that person break even, then that's a problem. And then the second half of that is if things drop, then what do you do? Now, are you going to let it's very probably hard to let a physician or attorney go. It's hard to let construction people go and if you let people go, everyone else starts to freak out. So you got to create that nice balance.
Yeah. And I think when we have the same struggles, challenges in accounting firms, right? Like we need people to do work. And is the work there? I think with a lot of contractors and part-time and flexible work arrangements, it's easier now to shape and mold that fits the person, but it also fits the company. And so I think there's some ways, not creative, like illegal creative, but if someone only needs to work 25 hours, I probably would never have considered that in corporate America. But now I'm like, 25 to 30 hours and it's a set schedule and I think this person's dependable. I think the world has changed and flexible work is a lot more open. And so that helps the employee, but it also helps the business if you're in that growth phase.
Correct. I mean, you could even look, depending on your situations, but there's some people who go, you know what, I only want to work. I'll work 4 months of the year and I'll go party for 8 months of the year. Maybe they're semi-retired. Maybe they're a mother who wants to work kind of during the school season and not off during the rest of the year. Or there's a million reasons of what's going on. And I think if you learn to be flexible, you'd be shocked at what you can probably find out there. The other thing we're doing is rather than hiring another person necessarily, what can we do to take work off of their plate that isn't high value work? So can we get stuff off their plate that we can send to another country or that we can automate or that we can do something else with so they can spend more time doing the parts that they love and the parts that we need them to be productive on, and they're not wasting their time on stuff that is repetitive or not fun or just not valuable to pay that kind of wage to do that kind of work.
Yeah, absolutely. We're always interested in machine learning and I guess artificial intelligence in a way that takes away the mundane or things that can be coded, if you will, versus I want my team to be thought leaders and they're having a relationship with a client. So, I don't want their high value time to be spent on coding transactions. I want someone else or a machine to code the transactions and we're looking for the anomalies and we're the brain on top of it. We're keeping a human in the loop. But, we have the relationship with the client. We know when certain things can work. If we're having those meaningful conversations, that's where the value is.
Truly, and doing it well. I think too often we might rely on others or systems and they don't always work perfectly. So you have to, again, everything comes down to finding the right balance for your particular business, because what somebody else does may not work for the way you do things in your particular business.
Absolutely.
One of the things that I think business owners, you always hear these horror stories, but they don't always think it can happen to them. And that's fraud. And when it comes down to financial fraud, it's shocking how much money can disappear. And honestly, this is one of the reasons I love Profit First is because there's buckets and because, when I watch their profit account, it goes up every month. And if it goes down, the first thing I'm like, why'd your account go down? Did you pay taxes? How much did you pay in tax? So it kind of shows you the true position of cash. So it makes it a little bit harder, but I'd love to hear how you put, especially with, your accounts, they have a lot of money coming and going.
Yeah. I mean, we definitely have seen an increase in fraud happening, but also just the phishing schemes, the changes, they're getting smarter, right? And when you're kind of talking about machine learning, it's harder for that to happen in machine learning. So fraud, generally, you've got some type of human involved, either if they're on the other side of the computer or, they're pushing on something. And in accounting, we always go back to the fraud triangle, right? It's opportunity. Can it happen? Do you not have segregation or duties? Is there one person that only has control of the money and no one's having any type of oversight? It's pressure. There's something even happening in the practice or with the person. Potentially, maybe they have a spouse or a parent or someone going through some medical hardship, and like the immense pressure of that. And then a lot of times you have rationale, like, oh, the business owes this to me. I haven't gotten a raise in 5 years, or the owners are making so much money and they don't share it with anyone. What they're rationalizing something there. But what we've mostly seen is they're getting an email where someone is, hey, update our banking information. And they're going in, they're not picking up the phone. I think as people, we want a text message, we want an email. We do not want to talk to other people. And so we're not picking up the phone to verify that information. And so I would say 8 out of the last 10 instances that I've seen something come through, it's please update my banking information and it's new banking. And someone either in the office or, maybe they thought they got new banking instructions from an employee. Hey, update my payroll. That's a very common one. Update my payroll. And I would be really hacked if my payroll got paid to someone else. So at our firm, we have a payroll change form or an account change form. And part of our process is we must pick up the phone and talk to someone. We've stopped a lot of things that way because it's like, no, I didn't. That was a different email. I didn't send that. Or, with vendors, really big multinational companies are not changing their banking every other week. And I think just being aware that those things could happen and not being like, we're in such a rush and we want to be efficient, we want to get it done, but we've got to pick up the phone and verify things.
And I will tell you right now, you are correct. The level of fraud is higher than it's ever been. The sophistication of the fraud is getting extremely good. Like they are, if they would put that much effort into running a business, they'd be highly successful. That's all. Like, why don't you just go run a business? You're clearly very good at what you're doing. You could apply it in legal ways, but they can spoof emails and they can do all of these. They can spoof phone numbers. And so you really, I think, always have to go back to the original. And if you can do face to face, because here's the question. Do you always know all the employees? Not you now, meaning you particularly, but within their office, the office manager almost might want to walk up to somebody and go, hey, I saw this. Is that correct?
Right. So the way our process works, if an employee sends in a payroll change, we call the office manager. The office manager has to go and confirm that. So we're kind of looping in some other people. Just a few weeks ago, we stopped a fraud of $25,000, which, it's big, right? I'm not want to lose $25,000. And so for some of our larger accounts, we're doing positive pay with the bank, which means it's really a pain in the rear, but we have to approve every single outflow the next morning so that it's got another step of being verified.
It's not easy. And then always your internal people, whoever's got access to your books, it is not hard to hide money inside of QuickBooks. And if you're not looking at your financials, you would never, ever know that this or that happened. And one of the things we do is, we're always looking at expenses month to month. Mm-hmm. So if certain line items stay relatively the same, then we know that it's normal. But if something starts going out of line, then you can always question it. But again, it's not, things happen. So it's not that hard to sneak stuff through. Depending on the size of the business, the bigger it is, the easier it is to do that.
Yeah. And we like to have a step in between the person who does the bills and the person who releases the money, right? It's called segregation of duties. And at a small practice, medical practice, attorney's office, sometimes that's the same person. And so I'm not saying that person is fraudulent, but you're setting up a situation where they have the opportunity, right? So if they're the ones who can write the checks, release the checks, and do that, the opportunity is there. They may be a great person, but as an owner, you have to have some type of oversight. And maybe after you establish a relationship, it's not looking at every single check, but you're looking at the order of checks. You're going through your reconciliation report. As an owner, I know you get lots of data and information, but what are you truly looking at when you're looking at a balance sheet income statement? Ask for the cash flow report or ask for the reconciliation report, just a few other things. And it doesn't have to be the same thing every month. Pick something different every month and learn something new.
So what I've been told is one of the easiest ways to do it, and it's not that difficult, is literally bring up the bank statement. And you can go down a page of a bank statement in probably 30 seconds. Like you can go down and go, is there anything here that jumps out at me?
Mm-hmm.
Same thing with a credit card statement. You can go down a credit card statement and go, is there anything here that you naturally, at least I naturally see stuff that doesn't fit. I'm like, hey, what is that? It drives my wife up the wall because, I'm like, what is that expense? I don't remember. This is a weird name. And, it turns out it's usually me buying something. But we always double check to see that because these things happen.
Well, and you can also, separate from fraud, sometimes you have subscriptions or things that you've signed up for that you've never turned off. And you're like, wait a second, I have 1,000 Audible credits. I'm probably not going to get through those. Let me pause this for a bit. There's always things like that. And a quick scan is where you can start with that.
We find that all the time, that there are subscriptions or they stop using, like they don't even know. Their employees stop using the software because they started using another one or that one added features. And so the person who was using it left. So we do software audits.
Yep.
Where you just send a note out to all your employees and say, are you using this? This is what it costs. Is it valuable? Should we keep it? Can we combine it? Looking at the recurring transactions, because like you said, that happens all the time where people forget and or especially when they're yearly transactions, you don't notice. You're like, oh, I was going to cancel that. And then life happened and you never did. And I know Mike's got a big one and I do it slightly different, but Mike will say, call up your credit card company and have them close the account and open a new one.
That doesn't always work. American Express thinks they're helping you by moving over your recurring transactions. Yeah.
Yeah, you have to tell American Express no. And so that's why I do it differently. What I do is for stuff that I'm what I call iffy, meaning, this is nice and I'm going to use it, but I don't know that I always want to use this. I create virtual credit cards through my credit card provider. And so I always use the virtual numbers for those so that they all expire within a shorter period of time. Or like if I'm signing up for 1 year and I have to pay for the year, I'll use a card that expires in a month. And so the number disappears in a month and they can't rebill me. So a year later, I get an email and then I go, oh yeah, I was supposed to cancel that. There's all these little tricks that you can figure out and there's ways to do it. But I'm always amazed at how much money leaks from a business over time. I don't know. Have you found certain themes of leaks or is it all over the board?
It's definitely software is an easy one. Recently we had telephone. Someone was supposed to $800 a month telephone. And, it was supposed to transfer over to something new. And then someone was supposed to cancel and no one canceled. Like we're talking a year worth of $800 a month telephone services that no one was using. Supplies sometimes, right? I'm a big subscribe and save for my personal life, but I probably don't need 1,000 sticky notes per month. Those types of things. And I think in the big scheme of things, it can be relatively small dollars, but it's more about the practice and the habit of always looking for the opportunity, looking at what you're spending and being conscientious of every single dollar that's walking out the door versus, oh, we've always done it this way. I feel like sometimes subscriptions and subscribe and all that. Well, we've always ordered from this paper towel manufacturer. I don't know what it is, but I think if you have the staff that has that mindset, set it and forget it, or we've always done it this way. I don't know. That's not the kind of staff I want. And we're not talking, I don't need people to track down 10 cents, but they need to be knowledgeable of it.
And so here's the reality of it. A lot of business owners aren't financially savvy, and the people they hire aren't financially savvy in their own personal lives. So they're not going to bring financial savviness to your business. And the reality is, if they are not incentivized to save money, they're more often than not, they're incentivized to spend money through different ways. And so they're not thinking that way. They're just looking, how do I get my work done faster? And you leave me alone. I do it by spending money. And so they spend money and they say, I need this tool and we need, this stuff. And it all does over time disappear. And some companies just jack up prices and they never tell you. So like the phone company might jack up your prices when your contract ends. If you don't know when your contracts end and you don't have reminders in your calendar to make the phone calls or get someone to make those phone calls, then that happens. I know I'm about to pay my insurance bill. It just went up a whole lot of money. I'm like, wait a second. This is continuing too much. Maybe it's time to shop around. But it's always tough to do that when it's too late almost. Like, you're up against the deadline. It becomes more difficult. So planning ahead is definitely much, much easier. And honestly, the business leaks it's just overwhelming at times.
Yeah.
So if people would like to learn more about you, your services, how do they do that?
We're at Webb, WEBBCFO.com. Would love to work with more professionals who want to make money. I mean, I feel like especially physicians, physicians get into business because they care about patients. And when their financial foundation is not secure, they're not serving their patients. And so we want to help them be profitable. We want them to have, the life that they always dreamed of being a physician or attorney. We want their employees to feel confident that the business is going to be here on a day-to-day. Because when you have that financial foundation, you sleep better and you do better service for your patients and your clients. And so that is really our driving mission of they've sacrificed so much to go through law school or medical school or whatever that path looked like. And they need to have the financial foundation so that they can do the work that they want to do.
And for me, it's, hey, let's make decisions based on your values, not your bank account. And so being sure that you've got the bank account that allows you to do that.
Yep, absolutely.
Thank you so much for joining us today.
Yes, thanks for having me.
So we've got another example of how Profit First works in yet another industry. So what are you waiting for? Well, you know what they say at Nike, just do it. It will help to ensure you have excess cash. And who doesn't love excess cash? Look, if you need help, find someone to help you. Sarah, me, one of our other guests who have done Profit First or Profit First certified. We also have the Profit Blueprint program. We teach Profit First and so much more. And it answers so many of the questions every business owner has. And if you want to do it yourself with some help, we share how. We give you all the spreadsheets and everything else. So maybe that's a resource. Or you just do it yourself. Great. Go. Do it. At the end of the day, you don't need more resources. You need to be more resourceful, which means you also need to take action. And remember, let's focus on the bottom line.
If you'd like for us to be a part of your profitability journey, we have different programs available ranging from do-it-yourself to one-on-one coaching. Our course, The Profit Blueprint, teaches you everything you need to know to transform your profitability. There are 3 different tiers ranging from DIY to done with you so that businesses of all sizes can get the support that's best. Join the waitlist in the show notes to get more information and be a part of the next cohort. If you want a done-for-you service, you can hire us as your Chief Profitability Officers. We only work with a handful of clients, so they all get our full attention. We work with business owners who have or are growing to $500,000 to $10 million in revenue. You can use the scheduling link in the show notes to get on our calendar for a good fit conversation to see if we're the right people to support you and how we can help you.
Remember to check out my other podcast, Richer Soul, where we talk about how to live the ultimate life and be the best business owner you can be. As we close out, let's repeat the mantra. Revenue is vanity, profit is sanity, and cash is king. Have an abundant and profitable week.